Good evening and welcome to our second episode on the P2 revision. I hope the first one was useful, where we managed to go through a couple of concepts. But today, the objective will be to look at a couple more. And let me start with limiting factor decisions, which will lead us from single limiting factors to multiple limiting factors and so on. Now, which is possible for a 25-mark question. Students will know that it was tested for a 10-mark question last exam diet. But a quick summary, okay, of what things should look like. And what I've also done is just brought in some of the graphs which need to be drawn, which have been hand-drawn, so that you see what the graphs should ideally look like at the exam. Because it's important that if you do end up drawing graphs, that they look a certain way, where you make maximum use of your graph paper as well, rather than just a very small, untidy graph. So you need to be very careful with a few things there, right? And with your limiting factor related questions, this can really be some bonus marks for you if you look at it very carefully, right? So the topic itself, limiting factor decisions, it's something that is looked at from the certificate level, where you have a situation where a company produces multiple products, right, and faces a shortage of resources. It could be a shortage of labor, it could be a shortage of material, could be machine capacity, could be any of these factors, or could be a combination. In fact, the very basics that's expected out of you would be a knowledge of dealing with a scenario where you have just one limiting factor. And that would be quite simple, where if you do have one limiting factor, you just make a decision based on maximizing contribution per limiting factor. You produce the products which give you the highest contribution per limiting factor. That's your decision-making criteria. Okay? And this should help you maximize your contribution, effectively profits. Right? So all you've got to do in exam questions is watch out for this. If the examiner has not mentioned use linear programming or graphical linear programming for that matter, if they've not mentioned it, chances are that the initial requirements just require calculations based on single limiting factor. So do a calculation to check to see how many limiting factors you actually have. If it is 1, calculate the contribution per limiting factor, rank it, come up with a production schedule based on that particular limiting factor. That's it. Right? So that's a single limiting factor. But what if you have multiple limiting factors? Right? If you focus on the slide, you'll see the very first one that we discussed, single limiting factors, and then this multiple limiting factor scenario. But if you are to use linear programming, especially graphical linear programming, this will be limited to a maximum of 2 products. Right? And the examiner is very, very specific, mentions use graphical linear programming. Okay? So if you have multiple limiting factors, we cannot go based on contribution per limiting factor as our decision-making criteria. Instead, we might have to draw a graph. Okay? We could solve it using simultaneous equations, but watch out for the word graphical. If it says graphical, you need to draw the graph. There's no other way out of it. Right? A third possible scenario that could be tested is where you have multiple limiting factors and more than 2 products. And they can't expect you to draw a graph for more than 2 products, because your products represent the axis, and you just have the x and the y axis. So if you've got 3 products, there's no way you can represent it on that graph. And that leads us to a technique which we refer to as simplex. And with simplex, you're not really required to do any calculations as such. You're not really required to form too many computations. It's just a matter of interpreting an output table that could be given to you by the examiner. Right? So questions that you could see at the exam could be a combination of simplex and even linear programming. Okay, so the focus will be on the last 2 points there, which is multiple limiting factors, use of linear programming, and of course simplex, because I believe that single limiting factors are fairly straightforward. So let's quickly look at how we would proceed with a question if we had multiple limiting factors and just 2 products. Okay, just looking at the slide, you'll notice these are the steps that we need to follow. Start off by establishing an objective function. So in very simple terms, calculate the contribution per unit of the 2 products that you have, right? And the objective is going to be to maximize the contribution that you earn from those 2 products, right? So you form an equation just based on the contribution per unit of the 2 products. Establish the constraints. So you're looking at coming up with constraints for each of your limiting factors. Now, this is something that students tend to ignore at this particular stage. Remember that not only are you going to come up with equations for your limiting factors in terms of resources, you also need to come up with equations for demand constraints. So it's not just resources, you're also looking at demand constraints. Maybe there's a maximum demand for the product, right? Ensure that is brought into the picture as well. So every single constraint that you put down, you are awarded credit for. So make sure that that is written down as well. Once you've got the constraints sorted out, we need to plot the constraints on a graph. Now do not plot any of the points on the graph until you've got 2 points for each line, right? You need to come up with 2 points for each constraint so that you can draw a straight line. Once you've solved these, got the 2 points, you can then decide on exactly what the maximum values are for each axis. Once you've sorted out the maximum values for each axis, you can then go ahead and draw your graph. So do not start on step 3 till you've actually solved each of the constraints. You've got the values for each of those constraints that you've established. Once you've done that, find the maximum values that you need for each axis, then start plotting your graph, right? So as long as you've got the 2 points, go ahead, plot your graph, and once you've plotted your graph, you can then also plot your objective function, which is plotting your very first step there, the objective function, on your graph. Right? Based on your objective function, you could figure out your maximum output. So let's see how this actually works practically on a graph paper. So this is what a graph would possibly look like. And you'll notice I've tried to make maximum use, right, of the graph paper. I've tried to make maximum use. I've not drawn a very small graph. You'll notice on the x-axis I've used the complete width of the graph paper there. Y-axis, again, significant amount of the space has been utilized. And we start drawing each of those constraints on the graph paper. And I've labeled it as well. And you'll notice that I've got material A, I've got material B, and I've just picked this up from a past paper question. So just labeling all these different constraints there. There you go. You've got all that there. Once you've got all these constraints, you can now figure out that your output, right, needs to be within a certain region. Okay? There are certain regions within which you need to produce. And the last line that I've brought in, you'll notice from the previous graph to this one, is a line that represents the objective function. We call it an ISO contribution line. Now, once you've got this ISO contribution line in place, it's just a matter of you placing a ruler on it, moving your ruler parallelly, okay, to this ISO contribution line, move it upwards, whichever point you come across last. So you keep moving the ruler upwards on a parallel line, you'll see that the points that you'll come across, you'll have a maximum of 450 for product J. You'll also come across roughly about 433 units for product L, and then you've got something there which is just a little more than 300 units for J and about a little less than 300 units for product L. Okay, somewhere there. You keep moving this ISO contribution line upwards. The last point that you come towards, the last point is your optimum production level. And that's that. Okay, so it's about roughly 310 units for J and about 285 units or so for L. This is effectively how you come up with your optimum production. Make sure that you've drawn all of the constraints on the graph. Every constraint that you draw, you're given credit for. Make sure the ISO contribution line is there as well, and you mark out the optimum production levels, right? Make sure you've not taken any shortcuts. If you've solved this using simultaneous equations and the examiner says use graphical linear programming, you will be docked marks, right? So this is linear programming, okay? What if the particular question has contracts involved, which is again another scenario the examiner tends to bring in. If there are certain contracts, so you have, let's say, product X and product Y, and the examiner tells you there's a fixed contract that is signed, you have to supply 100 units of X, 150 units of Y. And in addition to that, you have a limitation of resources. If you focus on the slide, here's what you have to do. If the question involves a contract, prior to establishing the constraints, deduct resources required to satisfy the contract. Always make sure that the contract is satisfied, and you then draw your lines on the graph. You come up with the constraints, all based on the resources left. So if I have 1,000 hours, labor hours, I've got a contract for product X, which takes 2 hours per unit. I set aside 200 hours for product X, the contract. I've got 800 hours left. The 800 is then used to form the equations, which will then be used to plot our lines on the graph. So the graphs effectively would be drawn based on, right, constraints developed after the contracts are satisfied. Okay, so if you're going with the assumption contracts are always satisfied unless something else is mentioned. Then establish the constraints based on the reduced resources. Okay, remember this. And another requirement based on, of course, your linear programming questions is calculation of a maximum financial penalty. Just two simple things you need to compare. Again, focus on the slide. You'll see total contribution if the contract is not satisfied. So if you don't satisfy the contract, what output level you'd go for and what your production would look like, you get a total contribution. Compare it with the contribution if the contract is satisfied. Make a comparison. That difference should effectively give you the minimum financial penalty that would have to be charged for you to stick to the contract. Okay? So second part of what the examiner is really capable of testing, right? It's important that you understand this. Now, if by chance we proceed with the contract, chances are we will earn a lower contribution. If you ignore the contract, chances are you'll earn a much higher contribution. So the difference between the two is effectively the financial penalty that the other party would have to make sure that we stick with the contract. Okay, this is also the maximum that we would be willing to pay in terms of a penalty, right? If the penalty is anything lower than this, we'd be very happy to just skip the contract. Okay, so that's linear programming for you. We'll take care of the last bit of limiting factor decisions, which is simplex, after a short break. Welcome back. Right, so we've gone through the basics of limiting factors. Let's wrap it up by looking at the last bit on limiting factors, which is going to be multiple limiting factors and more than 2 products, which means we can't put it on a graph. And the technique is known as simplex. And again, I've just picked out a miniature scenario from one of the past paper questions. And this is an output table, which tends to be given to you. And you'll notice on the slide, you've got product L, product M, product L other value, product M other value, direct labor, direct material, machine hours, and contribution. It's up to us to actually explain what each of these values mean. Okay? And let me quickly show you a list of what we are likely to see in an output table, explanation-wise. So this is what you're likely to see. Output of products, okay? The production levels, effectively. Any unsatisfied demand, surplus or unused resources, shadow prices, that's only available for scarce resources. So if you don't have enough, meaning a limiting factor, you might see a shadow price. Contribution for the production plan that we've come up with. So with simplex, because the calculation is reasonably complicated, the processing part of it is done by a computer software. The final output is given to you, and all you need to do is effectively interpret it. So these are the likely interpretations that we should be able to provide for an output table. And looking at our output table, you've got product L, 400, which is likely to be the production of product L. Product M, 194, which is likely to be the production of product M. Product L, other value, unsatisfied demand, probably. You'll notice it's 0. Product M, other value, unsatisfied demand for product M, 506. So one's likely to be the production, the other one's likely to be any unsatisfied demand. Direct labor, you have 312. It's not a dollar value, it just seems to be 312, probably hours, which would mean surplus hours. It's not a scarce resource. You've got a surplus. Direct material, you've got it in dollar terms, which basically means it is likely to be a shadow price. Right? So what do we mean by this shadow price? Shadow price is the maximum extra you're willing to pay, right? In this case, per kilogram or per liter of material that is available. So it's the maximum extra you're willing to pay, right? In addition to what you're already paying, the maximum extra you're willing to pay for each unit of the limiting factor. And there's another way of interpreting the same thing. It is the extra contribution that can be earned from one extra unit of the limiting factor. Okay? 2 ways of interpreting it. In other words, if we had 1 extra kilogram of this direct material, we might be able to earn $1.22 extra contribution. Okay? Or, for example, if we're already paying a price of $7 per kilogram for this material, we might be willing to pay $1.22 extra, meaning $8.22, to purchase this material. Okay? Machine hours, again, doesn't seem to be a dollar value. It just seems to be in hours, which basically means that's the surplus hours we have available. It is not in shortage. And finally, contribution should be the contribution we earn for the production combination given to us of product L, 400, product M, 194. So this is effectively what you could get in terms of simplex, and it is not too much of a complicated scenario if the examiner does test it. Remember that this has not really been tested in May or November exam to date. So it is due. Okay, so let's move on. I'd like to take you through one more very important scenario. This is something that has not been tested in detail last time. So probably something that we need to just be a little careful with, right? Likely to be tested. Performance evaluation. Objective is to check on how well or how badly a company, a division, right, or individual companies within a group seem to be performing. Okay, will involve a few calculations, could involve a few discursive elements as well. So let's just look at it. Looking at the slide, performance evaluation, few ratios that you could use. You're able to look at the gross profit margin, operating profit margin, provided information is provided. Operating expenses as a percentage of revenue or turnover, which is the difference between gross profit margin and operating profit margin, that's 1 and 2 above. Again, provided the information is available. Now, sometimes at the exam, the examiner might give you information on depreciation, which would mean this second point that is available there, which is on the slide, operating expenses excluding depreciation. You could do a calculation where you take total operating expenses, remove the depreciation, and then look at the real operating expenses. Check to see whether that has increased or decreased. Okay, because depreciation effectively is affected by your depreciation policy. Maybe you've gone with reducing balance. And over time, what happens with the reducing balance method of depreciation? Depreciation reduces. And it could hide inefficiencies in your operations because your operating expenses might remain constant or might have decreased purely due to depreciation. Right? So if the information on depreciation is available, do a calculation where you remove depreciation expenses and then calculate your operating expenses. Okay? And the other one, which is a very, very important one, ROCE, you might also refer to it as ROI, return on investment, which can be explained through a combination of two other ratios. Okay? Just taking a look at this, we tend to take a look at ROCE or ROI, which is the formula given to you there on the slide, which is operating profit divided by capital employed, or you might call it net assets. Okay? Which is an integration of two different formulae, operating profit margin, which is operating profit divided by turnover, and asset turnover, which is turnover divided by capital employed, or what we call net assets. Right? So every single time you do a calculation on ROCE or ROI, try to explain it using your operating profit margin and asset turnover, provided the information is available. Okay? So this is a useful integration to have, purely because some companies tend to charge a very, very high margin. They charge a very high price, giving them a very high margin. Okay? But due to the higher price, they are not able to sell as large a quantity, so their asset turnover is low. So high margin but low asset turnover results in overall the company making not such a great ROI. Companies that pick to go the other way around, they might charge a very low margin but have very high asset turnover. That combination could again ensure that they have a reasonable ROI. Right? So it really depends on the strategy the company needs to follow. Okay? What they intend on following. Right? But it's a combination of these two factors. This is the very basics that you could look at in terms of performance evaluation. Again, a question of this nature is due. It hasn't really been tested in too much detail in a while. Okay? Now, we also need to look at things like other performance evaluation methods, which would be RI, residual income, right? Advantages and disadvantages of the return on investment approach, which I'll just quickly rush you through because having a knowledge of it might come in handy at your exam. So we'll take a look at the disadvantages of going with ROI, the disadvantages of RI, or what we call residual income effectively, after a short break. Welcome back. Before the break, we were discussing ROI, right? So here's a quick summary of what we've done. We've looked at ROI, which is operating profit divided by capital employed multiplied by 100, or what you call operating profit divided by net assets multiplied by 100. So we've looked at a breakdown of this particular formula into two constituent parts. And the next measure which the examiner tends to look at is RI, which is operating profit minus the notional interest. The notional interest effectively is a net asset or capital employed multiplied by a cost of capital. Okay, but each of these techniques tend to have their pros and cons, right? If you focus on the slide, you'll notice disadvantages of ROI. It's a relative measure. It doesn't really look at the absolute returns that are made. So an investment which gives you ROI of 12% would be preferred over an investment that gives you ROI of 11%. But the investment that gives you ROI of 12% might be a $10 million investment, whereas the 11% might be a $100 million investment. Right? So the relative nature effectively ignores the scale. Over time, ROI should improve even if your profits remain constant, because net assets should keep decreasing. Okay? And this basically encourages companies or their divisions not to invest in assets over time. They'd rather have a deteriorating asset scenario where the net assets keep dropping, which would ensure that their ROI percentage keeps increasing, which is not really very good for the future of the organization, could in fact be detrimental to the organization. So focus is more on short-term profits rather than long-term value for the company. So you don't invest in things like research, you don't invest in things like training your employees, don't invest in new assets, you try to run it with your old assets, which is not the best thing, and also results in what we call sub-optimization, right? Individual divisional management might take decisions that benefit the division and not the overall organization. Okay? Now that's ROI. RI, with residual income effectively, we are looking at a main disadvantage, which is, well, this time we say it's an absolute value. It's not a percentage. Okay? If it's not a percentage, here's the problem. What if we've got two divisions to compare, and one division has 100 million worth of assets and they generate a profit based on that. The other one has assets worth 50 million. Can we really compare the RI of the two divisions? It seems unfair. Maybe then a percentage-based approach might give us a better picture. Most of the other disadvantages are pretty similar to ROI, right? So useful to have an understanding of this bit so that you could use it at your exam. But also, just a couple of extra points. Just be aware that you're able to assess the performance of a division. You're able to assess the performance of managers as well. Be aware when you make the comparisons that you only look at elements that are controllable either by the division or by the manager. Do not factor in uncontrollable costs, because it would not be very fair to be assessing the performance based on controllable costs or uncontrollable factors to either the division or the manager. Okay, so that's performance evaluation in brief. Although we've just focused on the financial performance evaluation, but it's also important that you look at the non-financial aspects, right? The non-financial performance evaluation aspects are as important, if not even more important, because if you look at measures such as ROI, RI, they effectively let you know how well or how badly the division or the company is done at the end of a period, right? So effectively, they are what we call lagging indicators or post-mortem indicators. You get to know that the company's done badly or they've done well, and that's right at the end of the year. Okay? Whereas non-financial performance indicators, such as customer satisfaction, okay, such as looking at things like labor turnover, okay, number of new products that we've launched, our market share, tends to give us an indication of what to expect from the company in the future. So even before we've recorded our profits and done all these calculations of these different ratios, you know well in advance look, this is the direction the company is heading in. Because if you have customer satisfaction improving, you know the company is going to do well. If you know you've launched a lot of innovative products in the last few months, you know you're going to do well. Right? If you know your labor turnover has reduced and employees are staying back, chances are your company is going to do better. Right? These non-financial measures are what we call leading indicators or pre-mortem, right, indicators. And they add a lot more value to companies sometimes compared to, of course, the financial indicators. Now, it's a mix of all these indicators, that the financial, the non-financial elements, that would get revisited through the balanced scorecard, okay, developed by Norton and Kaplan. It's an important concept. It's something that, well, the examiner seems to like testing and picks a few industries. We've seen questions from hotels. We've seen questions involving airlines, right? So it's a very limited number of industries. In fact, I believe there have been questions even from a library, okay? But it's a limited number of scenarios, and it's important that you do have a knowledge of the balanced scorecard. Please do a recap on the balanced scorecard, because it's, again, one of those topics that could be tested. And it's just important that you know what the balanced scorecard is, the fact that it covers 4 different perspectives and measures for each of those perspectives, right? Okay, let us move on. And the last possible aspect that I'd like to run through is transfer pricing. Okay? Now, transfer pricing effectively records or is in place to record the movement of goods between different companies or between divisions of the same company, right? So transfer pricing really serves quite a few purposes. If you focus on the slide, you'll see that it's the primary purpose is to record the transfer of goods or services between departments, divisions, or in other words, companies in a group, to ensure efficient allocation of resources, eliminate goal incongruence, motivate individual departmental managers, manage international taxation. Okay, a few different things that transfer prices should do. Okay, but now, when we set a transfer price, it's important that each of the divisional managers are kept motivated, right? It doesn't demotivate them. It does record this overall transfer of goods or services between these divisions, right? So the question that comes up is what is an ideal transfer price? There's a nice large range, okay? We'll look at that range. We'll also look at exactly international transfer pricing, okay? Right, so we've run through a few different topics that hopefully have helped you and should help you clear the exam this time. Before we wrap up, just a couple of very simple guidelines. When you do answer your theoretical questions, make sure that you've broken the theoretical questions down into individual components. If it's advantages, disadvantages, remember there are 2 requirements there. Always remember to start with a brief introduction. So if they're testing something along the lines of maybe participative budgeting, a couple of lines introduction on what participative budgeting is doesn't hurt. Make sure that your points go into different paragraphs, right? Do not bundle a whole list of points together. And focus on the verbs that are being tested. You know, if the verb that is being tested is explain, it's not going to be a very lengthy answer. Maybe a couple of lines would do for each point. If the verb is discuss, you need to write probably a paragraph for each point, right? So do focus on the verbs, do break the questions down so that you answer every single element of the question. All the very best for your forthcoming exams, and I hope that all of you are able to clear the P2 exam and that our revision helped you in some little way. Thank you.